Following the full implementation of a new rating system within the National Flood Insurance Program, more premium dollars appear to be shifting towards private flood insurance. Part of this may be driven by business insurance, where there's a need for higher policy limits. I'm Lori Chortis for AM Best TV. That's just one of the findings of a recent AM Best report on the NFIP, which comes as another hurricane season gets fully underway. Here to discuss the report is one of its authors, Associate Director David Blades. David, welcome. Great to see you. Thanks for joining us.
Great to see you, Lori.
David, can you briefly take us through Risk Rating 2.0 and what's happened as a result of that implementation?
Okay, so to understand Risk Rating 2.0, you really have to understand initial NFIP rating of their policies. And really, the initial rating plan was really focused on just river flooding and providing rates for that. So basically, they focused on flood maps at the time and elevation, and then basically assigned where the flood zones were, and then the premium wherever the flood zone was, or whatever was appropriate for that flood zone. That's how the premium was determined. Over time, those flood maps have become outdated, and additional factors really should be taken into account to really address the true risk that's being presented by properties. And I think that's where Risk Rating 2.0 came in. The focus was not only just on updated flood maps, but it was really focused on what information we've been able to get, and they've been able to get from newer technology. So you're looking at the proximity to different flooding sources, looking at the type of flooding, and those things were factored into. Whether it be heavy rainfall, coastal erosion, storm surge, those kind of additional factors were built into Risk Rating 2.0. And then also looking about the frequency of flooding in a particular area. So those are the types of things that are taken into account in Risk Rating 2.0. And so the premium that's coming out of that is really more appropriate and more up to date in terms of the actual risk that different properties are presenting from a flooding perspective. Now, that has resulted in a lot of premiums for a number of the properties going up, and that's what's created the opportunity for private private insurers for their coverage to be more commensurate from a pricing standpoint, whereas the NFIP pricing was really inadequate in all those years where we were depending, or where its pricing was dependent on the old or outdated information. Now that that's been updated, again, private insurers are finding that their coverage, or the coverage that they're offering, is more commensurate or more competitive, and that's where we're seeing those insurers that are now stepping, that have some risk appetite, that are able to get the reinsurance support for whatever capacity they want to put up. We're seeing those private insurers have been able to grow their premium.
Can you tell us about the private flood insurance market's performance thus far under the new rating system?
All right, so the one thing from the standpoint of looking at private flood as a line of business and how it's performed, the NAIC has really only captured that since 2016. So you're really only looking at 6 full years if you're going through 2022. But in those years, when you look at the performance of the NFIP product, federal flood, and that line of business, and comparing it to private flood has definitely had a much lower loss and loss adjustment expenses incurred ratio, and also the overall combined ratio, looking at losses incurred and the underwriting expenses. So for that period of time, the private flood or private insurance has definitely been more profitable than what we've seen out of the NFIP or federal flood results. Now again, federal flood is governmental program set up to be almost the insurer of necessity or last resort if the private market for those exposures that the private market is insuring. And it wasn't necessarily set up to be profitable in the same way that you're looking at private insurers who are really focused on trying to turn a profit as they adjust what they're looking to write, their risk appetite, and devise their risk selection standards and their pricing. So it's a little bit different in terms of looking at the goal, when you're looking at private insurers to NFIP, but absolutely private insurance has proven more profitable than federal flood.
The report notes some geographic concentration of NFIP within the Atlantic Hurricane Basin. how does that affect the overall performance of this particular line of business?
Well, it's definitely been impactful because if you think about the states that we're talking about in that Atlantic Basin, and especially when you look at the property buildup or the buildup of coastal properties in Florida, in South Carolina, North Carolina, and even going around to Louisiana and Texas, the buildup of coastal properties and in some cases expensive coastal properties, that's actually been impactful in terms of now there's more of those expensive properties in the line of fire, so to speak, when these storms have come up. And then the fact that, whether it's through climate change and different things, we've seen a greater frequency of some of these severe storms, be they, again, hurricanes or even secondary perils where you're talking about severe convective storms and things of that nature. That's really been impactful. So from the Atlantic Basin perspective, you've seen the buildup and the buildup in coastal property has really been impactful in terms of the losses that we've seen coming from the storms that have affected those areas in recent years.
The report also notes California's significant role in generating premium, but how might that potentially affect NFIP performance moving forward?
Well, looking at it this way, California is definitely, this is like a top 10 state in terms of total flood premium, and it's the one state that's not in that Atlantic Basin that is in that top 10, and it's the largest state in terms of its overall flood premium that's generated from the private market. So California is definitely impactful from that perspective. And then you figure that we've had unusually two major flooding events that have impacted California this year. Obviously, at the beginning of the year, end of December going to January, we had floods, historic floods that led into mudslides, and then you just had Hurricane, Hillary come through. So we're seeing, as far as, especially with Hurricane Hillary, we're still seeing, what the losses are, or what, we'll see what the losses have been from that. But I think, in terms of, and we'll find out what the penetration was in those areas, both from an NFIP perspective and from private flood perspective. So we're going to learn more as more of the loss data comes to us, but there's definitely a greater concentration of private flood in California. So I think it'll be interesting to see the federal flood losses versus the private flood losses. And like I said, we'll learn more in the coming weeks, especially as the Hurricane Hillary numbers come in. But I think safe to say for this year, the California property results are going to be, it's going to be very tough. And again, we've seen what's happened from the standpoint of some companies, not writing any more new business in that state as a reaction to not just, these kind of storms, but also wildfires in general. So I think California there's a lot going on. There's a lot that we as AM Best will continue to pay attention to.
Can you give us an update on the level of debt incurred by the NFIP and where that might head moving forward?
Well, it's funny. I mean, for at least initially, NFIP was probably doing well in terms of being able to pay off. It's that immediately upon the losses that came with Hurricane Katrina, and again, you were talking 20 years ago. That's when we started to see the debt build up in the NFIP. Now, there was, I think, about 16 billion, of that debt was forgiven back in 2018, but now that debt level is back up to 20 billion again. And again, that talks to, mentioned earlier, about the greater frequency of severe storms that we've seen. So, the program's just suffered from the standpoint of being in debt for the longest time, like I said, and that's taking into account the amount of debt that was already forgiven. So right now it's north of 20 billion in terms of the debt position that NFIP is in, and like I said, the expansion hopefully of the private market will help to hopefully alleviate some of that pressure. But like I said, ultimately we'll see if any of that debt gets forgiven. But as from that perspective, initially the program was able to pay its debts, and then since Hurricane Katrina, it's just been in a bad way.
David, it's been a pleasure. Thank you so much for joining us.
It's been my pleasure. Thank you, Lori.
That was AM Best Associate Director David Blades. To view a full copy of the report, please visit ambest.com. For AM Best TV, I'm Lori Chortis.